Jesse, beginning of August, earnings season's been pretty good. July was kind of dicey, but the Mag 7 have kind of been hero or zero so far.
Yeah, earnings after Meta and Apple, they kind of fell through the floor, whereas after Microsoft and Amazon's reports, they shot the moon a bit. And, we've been talking a fair amount about all the rest of the companies that don't get all of the attention that the big boys do, but they're doing pretty well.
As we look at the rest of the S&P, probably the best way to do it is the Equal Weight S&P. And this first chart, Charlie Bolello talked some about performance on the S&P Equal Weight versus the rest of the market. The S&P, as you see, he says the S&P's outperformed the S&P Equal Weight by 34% over the past 3 years, the widest 3-year performance gap in history. The prior record was 32% in the late 90s, followed by a sharp reversal of 7 years of equal weight outperformance.
Yeah, nothing says that that's going to happen this time, but it does, there are some indicators that kind of look familiar.
Yeah, I mean, with technology and the dot-com boom driving the late 90s, not saying this is that necessarily now, but look at this next chart. I mean, the S&P from the top in March of 2000 all the way to 9/11, the S&P was down 28.5%, and the S&P Equal Weight was positive 1 during that time period.
It acted defensively. There's no question about it. You pulled some things from Data Trek. Help me understand what we're looking at.
Just going sector by sector, the overweights in the equal weighted S&P, I mean, industrials are the largest. Energy's about the same, but you can see all of those, industrials, real estate, utilities, financials, materials, healthcare, consumer staples, not tech.
Right.
Not tech. They're overweighted in those sectors. If you look at the underweights, and this is what's really interesting. So, I mean, if you look this direction, you have to know what you own, obviously. The difference in the equal weight S&P in the 8 largest companies, the Mag 7 plus Broadcom, is that right? Mm-hmm. I mean, those 8 companies represent 1.6% of the equal weight S&P.
Equal weight, everybody gets 0.2%, and in the cap weighted index, those 8 companies represent 36%.
Yep. So you've got a 34% underweight in tech, and yet it is beating the S&P on the year, which is kind of interesting. So I guess all this is to say, I mean, we're not making the suggestion that you go and purchase some security. Far from it. Just noticing that, A, it's actually outperforming year to date. Second thing is, if one wanted large cap exposure, I mean, these are large cap companies. They're just not
mega cap.
That's right.